Guys, welcome to STOXMASTER. Today, we are going to learn a very interesting topic in the stock market, that's gap up and gap down. See, here, these are the two candles. Here, this is the first day candle, this is the second day candle. So, here, this is a green candle, this is a green candle. So, if it is a red candle, it's a green candle. It is a green candle, it is a red candle. If both are red candles, whatever the color may be, so see here, this very important concept here. What is the close of the first candle? Here, for the green candle, the close is the above the open. So, this is the close of the first candle. This is the open of the second candle. So, we have to consider, we have to remember that the opening of the second day candle is higher than the close of the before day candle. Then such a pattern is called gap up pattern. So on the flip side, here this is a candle, this is a candle, this is first day candle, this is second day candle. So this is the close of the first candle, this is the open of the second candle. So the open of the second candle is lower than the first candle, then such pattern is called as gap down pattern. So let's go to deep into the gap up and gap down. See here, this is a gap up. So yes, already explained, the opening of the second day candle is above the close of the first day candles. Then that is a gap up. So what are the causes of gap ups? Simply the positive results, the positive news or new developments or the strong earning reports, the favorable economic data, the positive developments in the company. So the merging all these things will give a huge gap up, a huge gap. So such a gap up gives us a very good profit. So we have to consider the gap up very much, because sometimes the gap is more than 100 points. So 100 more than 100 points is not easy thing in the stock market. So if the gap up forms, then how to trade? Let's see. If the gap down forms, then how to trade? Let's see. So now we are going to know about gap down. What are the causes of gap down? See, here already we know that. So this is the close of the first day candle. This is the open of the second day candle. So this is lower. The open of the second day candle is lower than the close of the first day. Then such a pattern is a gap down pattern. So here, what are the causes? Is already we know, we clearly explained in the previous. What I'm saying is about the gap up. So this is the flip side of the gap up. Simply, so the gap downs are usually caused by negative news or negative developments, poor earnings reports, unfavorable economic data, or the negative events impacting the company or the market as a whole. These gaps reflect the decrease in the price, the fall in the price. So a probability is there. Simply for the gap up, the buyers are more aggressive. In the gap down, the sellers are more aggressive. So let's see. See how to trade with gap up or gap downs. So the first and foremost thing is very important, the trading strategies. See here, the trading strategies are very much important for us to catch the movement of gap up or gap down. So what are the trading strategies? Simply, if a gap up form, then there is a possibility to continue the trend. Chances are more, right? Then compared with the reversal, right? So that suppose the gap up happens, then the buyers are, yes, already we know, suppose the gap up happens, buyers are more aggressive than sellers. Suppose the gap down happens, sellers are more aggressive than buyers. So by using a proper trading strategy, we can catch the gaps. Now let's see. So here for gap up and gap downs, we have to consider the risk and the risk management. Already I said, suppose the gap up happened, then buyers are more aggressive. So the price of the stock is move upward. Okay, price is rising, 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 rising. If suppose we take a trade in the price, suppose we see the price rising, so suppose we take a buy trade, then a probability in the stock market, anything will happen. Okay, so we must consider, we have to underline these words, anything will happen in stock market. So the risk is very, very more sometimes. The risk is very, very less sometimes. So the risk management is very important. So simply suppose we took a trade, buy trade, okay, then it reverse, then we will get some loss. So that's why it's better to manage our risk like that. And by selling also, suppose it take a trade, the sell trade, then against the market is against us, then there is a probability to get a risk, what is it, loss for us. So that's why it's better to manage our risk. So the risk management is also very important. So while we are trading the gaps, so risk management means simply the stop loss order is very important. Simply put a stop loss for every trade. It's better to take every trade stop loss, stop loss, stop loss. Okay, yes, I will give a clear cut stop loss video, a complete guide to how to put a stop loss in the various candlesticks, various patterns, whatever then the stock market. Simply, right, I will give the clear cut elaborate video for the stop loss. That's very, very important. Okay, now the risk management is also very important, right? So the next one, so see here in the next one, you can say that simply the volume consideration is also very important. See, here the volume consideration, simply by using the volume indicator, we can easily find that the volume is huge or not. Suppose gap up form. If the volume is huge, then there is a possibility to continue the trend. The volume is less, there is a less possibility, the lesser possibility to continue the trend. So we have to consider the volume very much. Okay. Similarly, for sellers also, for the selling also, while the gap down also, we have to consider, suppose the huge volume is there, then continues the trend. If the volume is decreasing, increasing in the volume is trend continues, decreasing in the volume is trend may reversal. Consider things very important, right? Next, so yes, we are doing very much gap up and gap downs simply, but some common mistakes to avoid. So the common mistakes are very, very important. Okay, simply we are not concentrating on the common mistakes. What are the common mistakes? Simply, suppose the gap up happens. Simply, we are trading it in the middle of the trade, so middle of the candle. So that's not the right way to take a trade. So simply gap up happens or gap down happens, whatever it may be, either gap up or gap down, we have to take the trade after confirmation, either pattern or any indicator. We have to take an indicator. Support or resistance are very, very important. So such sometimes the gap up and gap downs are worked as support and resistance also. So that one also we have to consider that one. Okay, right. So the common mistakes, these mistakes must be avoided. Otherwise, it will be very we will get hit by the loss. So that's why. So if we avoid the common mistakes, then there is a possibility. Simply at any time, suppose we are taking a trade, then it's better to confirm the trade at the right time. We have to take the right decision. Okay, then we will get huge profits in the stock market. No doubt at all. Stock market gives so many opportunities for us, but day by day. So you have to remember the thing. Yes, we will get opportunity the next day. Okay, don't get lost by these common mistakes. Okay, that's for today. If this video is helpful to you, please don't forget to subscribe. Please like, share and subscribe my channel. Thank you. Have a great day.